Welcome to The Road Less Traveled with Tiffany Rosenbaum. This podcast is about sharing the success and failure of entrepreneurs. Join in and learn from others' mistakes so you don't have to go through the same hardships in business. Now let's welcome your host, business coach, real estate investor, and proud wife and mom, Tiffany Rosenbaum.
Welcome to another episode of The Road Less Traveled. We are so incredibly excited. We have John Gillespie here today, from getting an MBA to working at Charles Schwab's to now being a partner in another business. And I want him to explain the business that he's in because I actually think it's an incredibly important business for people. But John, why don't you tell us a little bit about yourself and then the partnership that you have created in this new business?
Thank you, Tiffany. It's a pleasure to be on the podcast and look forward to the opportunity to have this conversation. And so, I'm a partner and wealth advisor at Gallacher Capital Management. I also serve as our chief investment officer and been with Gallacher since 2007, so coming up on 18 years.
Okay.
And like you said, started my career at Charles Schwab. And that was just a great opportunity to get my feet wet in the industry. And I've always had an interest in financial services, wealth management, investing, but honestly, coming out of college, I knew several people that went the route of, hey, I'm going to work on building my own book right out of the chute. There's plenty of companies that hire college graduates to do that, and they put them on a track to build a book as quickly as they can. And I just was never comfortable with that because I think it would have involved calling family and friends and asking for money. And they might wonder, would you have any experience?
Yeah.
And so that just made me look at a different pathway of getting into this industry. And Charles Schwab was a company I'd heard great things about. Actually, coming out of college, it was going to be between Fidelity Investments or Charles Schwab. I had an offer from both. And I had known some people that had, worked at those firms before and was excited about, the opportunity there. So started working at Charles Schwab in the year 2000 in Arizona and bounced around the company in different capacities. It was an interesting time coming off the tech bubble. Mm-hmm. So, the tech bubble was bursting as I joined the firm. And so was able to survive multiple rounds of layoffs at Schwab as they were trying to, manage that difficult time period. But I never envisioned it as a long-term goal. So met Kevin Gallacher, the managing partner and founder of our firm, in 2007 through a church connection. And that was actually after I had moved to Colorado in 2006. So just backing up, 6 years in Arizona, then a year in Colorado, and then met Kevin a year later and decided to make the plunge. So we are a full-service wealth management firm, but we've also evolved to have other platforms as well. We have a platform that supports independent advisors to help them scale their practice. And we also have our own investment strategies, and that plays into the platform that we offer advisors. And so it's a lot of balls in the air, but I enjoy it because at Charles Schwab, what was always frustrating is that my job description was so narrow. It was just so narrow and limiting. It was a great experience, but I wanted to do more. And so when I joined Gallacher Capital in 2007, I just knew it would be a great opportunity. I didn't know exactly where it would take me. Eventually, I became an owner of that business, which I am today, but that wasn't what happened initially.
Okay, so you're part owner in this business, correct? Can you tell us a little bit about the structure of it? Like how many employees are there? Can you tell us that?
Absolutely. Yeah, there's 12 of us if you include the three partners. So the partners are Kevin Gallacher, his son Jordan, and myself. Okay. So then there's 9 other staff, and ranging from advisors to operations personnel, compliance. So it's become a fairly large organization. When I joined in 2007, it was just Kevin, myself, and a former partner who's no longer with us, and one admin.
I want to dial into this a little bit. What's interesting, y'all started in 2007. Okay, if anybody is listening, 2008 was a horrible year for the investment world. especially real estate. So how did y'all go from 2007, and how did the real estate bubble affect y'all in 2008 to 2009?
Yeah, it's a great question. So, like you said, I joined Gallacher right on the heels of the financial crisis materializing. So, October of 2007 is when the stock market peaked, and it was about that time that I was handed our clients' portfolios and asked to be in charge of portfolio construction and management. So, little did I know what was coming, and so it was a wild ride. And come January of 2008, we could tell something big was happening. And at that point in time, we just upped the communication with our clients. I mean, that was just critical. We knew that everyone was feeling uneasy, and the stock market was extremely volatile and really in free fall for many periods of 2008. And as a fee-based advisory firm, when your clients' assets drop in value, revenue immediately drops as well. And so I can still remember one day in Kevin's office, and the other partner, from the beginning, they kind of brought me into some close conversations, even though I wasn't yet an owner. And he wrote up on the whiteboard, okay, here's our compensation right now. Here's what it's going to be tomorrow if we're going to survive this period. We don't know when our compensation is going to go back up, but we're not going to cut the comp of the couple of other team members. We're just going to cut our comp. And I can still vividly remember that conversation. And so we managed through it. Our assets dipped significantly just because the stock market was down from peak to trough over 50%.
Oh, it was a rough time. How many clients did you have at that time? Do you know?
So I would imagine that at that time we probably had in the neighborhood of 200 to 250 households.
Okay. And how many do you have today?
We've grown to probably 400 households today.
Okay. And during that time, when you upped communication, how did you keep, because there's always a volatile time in business. No matter what business you're in, there's going to be a time where the market dips, the market goes up. How did you make sure your churn of clients did not just astronomically go sky high?
Yeah, I mean, looking back at that time period, there were very few clients that left. And I think it was just
That says a lot.
I think it's a testament to just staying in communication with clients. And I feel like we were on client calls frequently. I remember drafting emails that were sent to all of our clients just to help them understand what was happening and some positive data points to hold on to. And so I think it was communication what was the key, and we tried to not make any knee-jerk reactions with portfolios, help them understand. Because as a wealth advisor, you're a psychologist. You're helping people to avoid the tendencies that we learn about in behavioral finance, which is really to step aside when there's volatility, but that never pays off in the long run. So.
Which is so important in business as well. That knee-jerk reaction a lot of times is a wrong reaction. I had a friend that literally, it was family, and one family member was investing for a brother and a sister, and during this time they did a knee-jerk reaction and pulled everything out when it was at the bottom of the market, and that sibling lost everything. And it's like, those knee-jerk reactions, whether it be investing or a business, you got to sometimes wait a little bit to see actually what's going to happen. Because everybody that waited, it comes back. It's like real estate. It's like any time. It's a roller coaster, right? Every 7 years about, the market goes down and shifts back up, and it takes time. But that knee-jerk reaction, a lot of people lost out on a lot when they were like, oh, I got to pull, It's not a quick get-rich thing. It takes time.
And it's an emotional decision. I can still remember the day before the market bottomed in March of 2009, sitting at a conference in the conference room with one of our clients and explaining that we did feel that a bottom was probably close by.
Yeah.
And I remember the client kind of snapping back at me and basically feeling like they'd heard that, and probably they had. because there were multiple points throughout that financial crisis where we thought the bottom was there. And anyway, in this conversation, I could not convince the client to stay invested. And sure enough, the market bottomed. We did our best, right?
Yeah.
And most of our clients did stay invested. But at the end of the day, it's their money.
It is.
And we have to be super respectful of that. But it's our job to advise and to help them take a step back and look at the big picture.
Oh, 100%. You got to take a step back. And but more people lost when they pulled out than if they would have just stayed in and just waited the game. That's how it is in most investments or business. So as you've grown over the years, you've gone through that. Communication was huge. What have you seen through the growth of the company? Like, what have been the issues, the pain points of the growth? Because when you grow, there's always pain points in a company, and there's always stretching periods. What were some that you all have seen over the years, and what did you do during those times?
Yeah, it's a great question. And ours is an industry where you need to constantly be innovating and finding ways to differentiate from your competition. There's lots of wealth management firms out there, and ultimately it is a relationship business, so we have to build a model that honors that relationship, that trust, make sure that communication is frequent. But if you're not looking for ways to grow, then you're going to be left behind. And so I think that as a real testament to my partners, they're just always thinking about how can we do things differently. They're always thinking about, is there something that we could get involved in that we haven't been involved in the past to differentiate ourselves? And we've dabbled in different types of investment strategies, such as individually self-syndicated self-storage projects, or we've been involved in private funds invested in private equity, and right now we have a private fund invested in boat and RV storage. And so not your typical investment offerings that a wealth manager might typically offer. And we had a hedge fund for a time as well. And that was a tremendous learning experience. In the end, it was a value-based strategy in a market that was more growth-oriented. So ultimately, we decided to wind that down. But I think our desire to innovate constantly has helped the growth to continue, helped us to attract different types of clients over the years. And I think that, roadblocks have just been finding times that, revenue is somewhat stagnant, but we're trying to invest in our people and create a better offering. And so, it's not just about pounding the pavement and trying to find new clients, but how can you improve your overall offering to make it more attractive to potential clients that are out there?
I think you said something very, very important, which most entrepreneurs need to listen to, because when you're growth oriented, you're going to have times where you go into something, you're like, oh, you know what, that wasn't a great, and you got to pivot. Anybody that I've ever met that is really growth oriented or me, you'll start something, and then sometimes you have to go, that wasn't the best choice, so I'm going to pivot and go back. But you learn from the opportunities as well. But also, like, if you wait too long to make a decision, you never know if it's right or wrong, right? So I'm always into make the decision, move forward. You'll find out if it's right or wrong, or if it was a benefit, and maybe it's a benefit for a time, but then it changes. And then it's like, okay, I got to move on and move to the other area. I think that's how people become successful. They learn from their decisions and their struggles. One thing that I think is very interesting when you were filling out the form is, and most entrepreneurs do this, is they have multiple ancillary businesses, right? But then their team works underneath all those businesses. And I love that you said that, because we do this in our business. You said breaking out the revenue by business line is fairly straightforward, but allocating expenses is more complex. So what have y'all done to make sure you truly know your numbers in that? Because if the team is underneath different ancillary businesses, what are you doing to make sure you know each platform is profitable or negative?
It's challenging, and it's something that we are in the middle of trying to tackle right now. And so it's a work in progress. And because a lot of our input is labor, is the salaries and compensation of our staff, and identifying how much of their day is going to be allocated to which business, right, is really difficult to identify. And I think and even the revenue is not black and white. It's pretty close, but there's some overlap there. But once we can bifurcate the revenue, it is just honing in on how much is each person spending on each business. And the expense allocation is a real tricky part as well, because some expenses are shared. Mm-hmm. Many of them are.
No, 100%. And we do this on our business. It's numbers if I could tell any entrepreneur the most important thing is it's like numbers. That's how you know where to put your money, where to allocate it, where not to put it, like you're talking about. And I think we dial in numbers every day. And a lot of times we have to go back and fine-tune them and fine-tune them more and fine-tune them more. And it's like the amount of time we've spent on numbers, I'd probably be embarrassed to say, but it's the only way we know what we're doing, right? It's like, as an entrepreneur, I find young entrepreneurs that are listening, a lot of times they don't put enough time into the numbers. They don't put enough allocation into the numbers to make sure the numbers are correct, so they know. But I think that what you're talking about is actually one of the biggest issues for making sure the numbers are correct. I truly believe that. So I love that you're talking about, hey, y'all are always fine-tuning it, always trying to figure it out. Because I think most entrepreneurs actually put it to the wayside, as I've talked to them. It's like, I'll get to it later.
Yeah, yeah. And we, in recent years, so to answer your question, like how do we understand the numbers better? The partners cannot do it themselves. So we hired somebody to help us with that. Someone with an accounting background that could run reports for us on an ongoing basis, so that we know where we're at, because we're being pulled in a million different directions. We really don't have time for that. It's hard to see that as a revenue producing activity. And so I think that's why many business owners don't spend the time on it that they need to. But this has been a super valuable hire for us. And the reports that he's generated has been really helpful. I can't imagine not having those reports. I can't imagine that we went as long as we did without him on our staff.
Oh, 100%. Oh, there were years that I went without. And it's like, oh, what was I thinking? It's like, it's so incredibly important. I love that you hired someone. We hired someone too, because I'm like, I'm not gonna be able to do it. I'm not a controller. I'm not a CFO. So it's hiring someone. So I love that. Numbers are really important, but within the numbers, sometimes numbers don't always tell you everything. And you talked about how you pay close attention to your team's capacity. And I think this is actually, besides numbers, this is another huge pain point for entrepreneurs, because when you look at numbers, profitability versus expenses and net income and all those things, sometimes entrepreneurs just put a bunch more stuff on the people, but knowing if they have capacity or not. How do y'all regulate that? How do you know if your team has capacity? How do you know if they're overloaded?
Yeah, it's not easy, but it's super critical. We have regular meetings. This morning, I just came from our team meeting that we have every Monday, but we have other meetings throughout the week. We have an operations meeting on Wednesday. And these are just opportunities in a team environment to help gauge, what are people's capacities, but also there needs to be individual conversations as well about that. And I think in a close office, you can kind of tell how people are doing from that standpoint. I'm actually run our Arizona office now, and
nice.
So I don't have as good a visibility into that. It's more through conversations versus walking through the office and peeking my head in to visit with the staff. So we honestly can do a better job in terms of knowing exactly people's capacity. But when we do sit down and have formal reviews, that's a big conversation piece. But I think there's just so much communication within our team on an ongoing basis that I think for the most part we're dialed in there, but we can, I think, find ways to be even more efficient.
Oh, I think efficiency is always a whole nother topic, and we could dive into that 100%. But I love that you said talking to your team, because I think that's incredibly important, because they know they're on the front lines. They see what's going on, even more so than we do a lot of times. And so in our businesses, we do one-on-ones weekly. Our management, so top down, does one-on-ones weekly. And I found once we implemented that, we were able to get engaged a little bit more, because numbers didn't always tell us everything. Because you can have the same amount of clients, but do you have high touch clients over here versus this person? And so it was interesting soon as we did one-on-ones is the information we got. So I love that you talked about actually meeting with the team, talking to them, stepping in or calling them or whatever you need to do to get that information.
Yeah, I think one area, again, I think we can be better at this. We're trying to figure out the optimal frequency of formal reviews. I came from an environment at Charles Schwab that I didn't love the structure. I felt like it was so, numbers driven.
Yeah.
And I sat down with my manager and would be critiqued, and I just felt like it was never fair from the standpoint of what they were measuring me on, and it was just too quantitative, right? Too black and white. But you can also swing too far to the other end and just be way too subjective and way too touchy-feely, and not be looking at the numbers enough. So I think, given my resistance to that corporate background, I need to constantly check myself and make sure that the staff is being held accountable, because as a business owner, I've always got a million things to do. My capacity is always to the max, but I need to be helping the team be motivated. And I think sometimes if you're not measuring enough, then they don't know where they stand. So
100%. I love that you said that. Like, I have a really good friend that's a business coach, and she helps multi-million-dollar companies go to the 100 millions and 200 millions. And I was talking to her, and one day we were just at lunch, and she said something. I was like, "Oh, I'm going to totally reuse this." I said, "I'm going to quote you all the time." And she goes, what entrepreneurs struggle with, they don't know how to care about the cause and care about the person. Usually they care about the cause too much, so way too numbers driven, or they care about the person too much, and then they drop the numbers. She goes, the only way for a business to be successful is to care about both, like numbers and the person. Like if a person is out sick, care about the person. But have they done what they need to do to make sure their numbers still stay? So have they made sure their team's right or whatever? So it's been interesting. We do one-on-ones, and we do like 10 the first 10 minutes. We discuss with our team, let them tell us about their weekend, how's it going, what personal life. And then the second 10 minutes, we talk to them about what we see and what we appreciate. And then the third 10 minutes is like the numbers. Hey, these are the KPIs. This is where we're at. This is where we're supposed to be. What are the struggles, and where can we go from it? And once she told me that, it was interesting. And, as an entrepreneur myself, it's gotten me out of my comfort zone a little bit, because it's like, okay, so every time I check myself, do I care about the cause and the person, or do I care about the person and the cause? Which one's going more? Because if they get out of line, usually something actually gets out of whack in the business. And so it's been interesting, but I've been working on it, and it's made shifts in the business. Like, how do we make sure we're always too deep to make sure nothing ever lapses? But
yeah, I mean, the management and the oversight of your staff is something that I think many business owners don't give enough attention to. And so as we've grown, I think it's something that my partner and I, especially Jordan, because Jordan and I really run the day-to-day operations today. And it's just something that we recognize in our conversations, that really managing a team takes time if you're going to do it right. I mean, I think back to my days at Charles Schwab, and I had a manager, and that person was over maybe 8 to 10 people, but all they did was manage.
Mm-hmm. Oh yeah.
and that was enough. And so for us, we're managing a team, and we're prospecting, and we're meeting with clients. And so that's why I think we try and hire people that really don't necessarily need a lot of management, if that's possible.
Oh, 100%.
And I think for the most part, we found that. We have hired people that have eventually left because they've complained about not enough structure. But our team now is made up of professionals that I think they want to be left to themselves. more than the average person in corporate America that wants, that constant tracking or reassurance of how they're doing. So it's just a balancing act. I like what you guys are doing, and I think we can learn a lot from that structure. But just kind of giving more color around kind of how we have tried to hire and how we kind of approach that piece of it. But it's a balancing act.
Oh, it is. But you know what I love is you just honed in on something really important. Every business does it different. Every business has different core values, and every business has a different vision, right? And what you just said, without saying it, is you hire according to your core values, pretty much. Like, you want more, let loose and things like that. And that works. That totally works. And I think that's what's important. Like, I was talking to somebody else, and they're like, they hire and fire off of core values. And I think that's so important because every business has a different set of core values. And whatever those core values are is great. But if you hire people off of that, then it works. If you don't hire people off of that, it doesn't work, right?
Yeah. And I think that's easier said than done, right?
Oh, yeah.
How to identify someone that's going to exhibit the core values that you have. And I think we've also learned as well that you've got to have a probationary time frame when you bring somebody on board. Because I think we've had too many examples of you're in an interview and you love what they're saying in an interview and you bring them on board and everything seems great, and then 2 months down the road you're thinking, this was not the person we thought we hired.
Oh, yeah. Oh, so. You just said something that I think 99.9% of entrepreneurs go through, because they interview, everybody's on their best foot, right? It's like, hey, I'm perfect, I can do the job. And then you get into the seat and it's like, wait, what just happened here? Who I interviewed and who's in that seat are two different people, right?
You feel like you've been duped.
Oh,
right?
It happens all the time. And so we changed our interview process. We see them like 4 times. And it's a long, grueling process. But it's interesting how many people we've weeded out because of it. But I would say hiring is like the most important thing, but it's actually my least favorite thing.
Yeah.
Because of the time and it takes, and I've taken over all of hiring. But it's such an important part, like what you said. It's so important to the business, the function, the people, everything.
Yeah, absolutely. And it's we're really happy. We feel like we've got the best team we've ever had, which is great. We feel like we have a team that will allow us to scale the multiple businesses that we operate. And so we're super excited about what this team can do for us.
That's exciting. So what is the vision for this company? Do y'all have a vision?
Yeah, absolutely. And so our core business, what allowed us to really grow over time is wealth management, right? Mm-hmm. And working with high net worth individuals. And we always want that to be our main focus. And really to build that business, I'd say it's been on 3 pillars: innovative investment strategies, thoughtful planning, and exceptional service. Right? These are ways that we can differentiate from our competition. But now we also have an advisor platform, and this was something that we just stumbled upon through, I'd say, innovating over time. So I mentioned before that we had a hedge fund, and one of our hedge fund investors asked if we had a dividend-focused strategy that we could put together for them in addition to their investment in our hedge fund. And we didn't at the time, so we decided to create one. My partner Jordan had just finished his master's in applied quantitative finance from Denver University. Nice. And he had spent a lot of time building factor-based portfolios, which is a methodology by which stocks can be selected using a quantitative framework. And so we built a dividend strategy around that, a dividend strategy that incorporated a factor-based approach. And now that has grown to, we have a whole handful of strategies. And we track them against benchmarks. And so now with this track record, we can go to financial advisors and offer a platform to them where if they will allow us to handle their investment management, then they can receive a higher payout of their revenue than they could anywhere else. What is missing in our industry is an integrated platform where you have where the firm that is overseeing the advisor also provides investment management, because typically an advisor is going to partner with a firm that is going to take a percentage of their revenue. And yes, they'll offer investment management solutions, but those are all going to third parties. Since we have now stepped in as an investment manager, we can oversee an advisor's business, we can provide back office support, and if we provide the investment management, it just provides a financial incentive platform for the advisor that's tough for them to match anywhere else. So this is an area of our business that we envision growing significantly in the coming years. Attracting financial advisors onto our platform, and we have multiple individuals that we're speaking to currently. So we're very excited about the growth of that platform, but we are super focused on not allowing that platform to take us away from our core business, which is supporting our clients. And we believe that by being the very best advisors we can to our wealth management clients, that makes us the best consultants with our advisors that come onto our platform.
Okay.
So that is really, I kind of think in a nutshell, our vision for the future is both of these businesses complementing each other to allow us to really experience higher growth than we would have otherwise.
Okay. Well, with all the growth, all the moving parts, and that's what I call them even in our business, all the moving parts. Like one of the things that you said you were working on is being able to delegate to others, right? I think every entrepreneur, I had to learn this, I still have to learn this. Every entrepreneur has to learn this. How's it been going, and what have you done to learn how to delegate to others and be able to trust that person?
Yeah, it's hard for me, personally.
I think it's hard for any entrepreneur, let's be honest.
Yeah. And I know that because I've listened to some of your episodes, and I know that you're a big fan of the DISC personality test, and I need to actually do that. I did a quick kind of analysis, and I believe that I'm probably a primary C and a secondary I.
Okay.
Whereas my business partner Jordan is probably a primary D. Sorry, I'm a primary C, conscientious, right, and a secondary S, which is steady. My partner Jordan is a primary D, driver, with a complementary I, which is influential, yeah. And so that's why we're a good yin and yang.
Yeah.
And we're as partners, I think we bring different things to the table. But I was doing some research on what the weaknesses are of the C, right, and micromanaging and lack of delegation is one of them.
Okay.
Because we like to control things. We like things to be done a certain way.
D's are that way too.
Yeah, I think to everyone, every business owner is to a certain extent. I think, yeah, but it's something that it's been a personal struggle for me.
Well, if you email me, I'll send you a link so you can take one if you want one.
Yeah, no, I'd love that.
I think when it comes to entrepreneurship, when we all start, it's like it's our baby. We wanted to make sure there's no mistakes, there's not anything that goes wrong. And what I realized over time, and I think every entrepreneur continues to learn this throughout whatever stage they're in, is that they realize if we hand it off to someone else and we train and develop them and they do it, then our capacity grows, right? But it's so hard to do that. So I used to be a CS, but I transitioned, what I'd say is to a DI. So I'm a really high D, like really high D, the highest on the totem pole. And that's not always good in an entrepreneur.
Every organization needs one, though.
Yes, but the D's have to learn not to rampage their business as well, because we're change agents. Man, we can go like this and get stuff done and be done. But the problem is we also struggle to slow down and allow the entire team to be like, hey, this is the vision, this is what has to happen. So I actually ended up hiring someone a couple years ago. Said, all right, everything has to go through you, and then it goes to the team. Because I would change so fast that it was like, wait, hold up, we're still on number A change, and you're on C. And so I think all personalities have bonuses, all personalities have negatives, right? Everything has something to it. And if we learn what our negatives are or our downfalls, and we, like you said, have your partner as the opposite, then they complement each other.
Yeah. And, on the control and micromanagement, I will admit that I've even rewritten staff emails to go out to clients, and I'm not proud of that. And I realize over time that's not doing anybody any favors. Right?
But I don't think you're the only one that's done that. Actually, I know you're not the only one that's done that. I know.
But I'm just really focused these days on trying to empower. We've got such great people with so much potential, and I don't want to hold them back. And I want to give them opportunities to grow as quickly as they can. I did start reading the book, Buy Back Your Time, I think.
Oh, yeah.
Where that concept of if it can be done 75% as good as you would do it, then you shouldn't be doing it.
100%. I actually think we can hire people that can do it well better than us, to be honest.
Yeah.
Now that I see what at least my team can do, and it's insane to watch it. But the word you chose was it was profound, because I love this word. You said empower them. So how are you empowering your team to be able to take those responsibilities and to be able to do what they need to do? How are you empowering them?
Yeah, every day as I go through the list of things that I need to do, I just ask myself, can somebody else do this for me? And if they can, and even if it's a bit of a stretch, I need to still consider handing it off to them. But not just handing it off, but handing it off and setting them up for success, but not micromanaging, right? It's a fine balance. So I think that's, for me, just practically on a day-to-day basis. But then my partner and I, we're constantly talking about our team and how is this individual doing? What can we do to improve their growth path? And we just came up with a new whole team structure that, again, to ensure that we support our multiple business lines in an efficient and effective way, and also lay out a growth path that our staff can choose from. So there's really 4 or 5 different growth paths that now the staff can look at and say, oh, I guess my only path is not just to become a financial advisor one day and meet with clients, but I can support financial advisors on the operations side, or I can support them on the trading side. And so it can just depend. There's various different tracks. And so I think if your staff can see the growth path, I think that's one of the challenges of a small company, is helping your people understand, well, what's my growth path here? And so we're trying to do that and just find ways to constantly delegate as much as we can.
Oh, I like that. Okay, so couple more questions. I want to be respectful of your time. What is the worst advice you've ever received?
Yeah, this is just goes along with what I just talked about. Probably already answered your question, which is,
okay.
If you want something done right, do it yourself. I think
that's bad advice.
It's terrible advice, but it's advice that I feel like I have kind of followed over the years, and but recognizing today that it doesn't do anybody any favors. It can lead to burnout, right?
Oh, yeah.
I'm turning 50 next month, and so I'm really kind of self-reflecting on, how can I create better, what's the word, I guess, work-life balance, and again, elevate the team around me to reach their potential. So, yeah, that would be bad advice that I followed.
What's the best advice you've ever received?
So I would say there's a phrase that has stuck in my head ever since I was a kid, which is, the key to success is self-discipline. And when I was younger, my brother had a little keychain. It was a little rubber keychain in the form of a key, and that was the quote on the keychain. I remember one night my dad walked in and he picked up the keychain and looked at it for a second and kind of pondered on it and said, "This is so true." And, knowing my dad as one of the most disciplined people that I've ever known or met, that kind of stuck with me. And I just have given it a lot of thought over the years. And, in an effort to live by that, I've created personally a list of daily habits that I feel will allow me to become the person that I want to be, or the best version of myself. These will span across different categories: mental, physical, spiritual, personal, family, temporal, and career. And I've identified 20 habits that I try and that hit on all these categories every day. And I've even outlined, how much time they all take, and so that I'm not overwhelmed and realize that I can be doing all these things on a daily basis. And so, I guess time management is an extension of that quote, right? And I'm very focused on time management each day in the office as well. What is the highest and best use of my time today?
Mm-hmm.
And how can I? Because again, running a business, you can be pulled in so many different directions that are just not where you should be spending your time. And so to me, it's just that being disciplined really at the end of the day with your time.
I love that you said discipline because so many people talk about motivation. Motivation is an emotion and it comes and goes. Discipline is a choice. And it's like, I'm going to be disciplined on what I need to do. And so I always say discipline over motivation because of the fact that motivation, you're not going to be motivated every day. I don't care who you are. You're going to wake up in a bad mood one day. You're going to wake up and feeling tired. Discipline. And I take it, I like Michael Phelps when he was talking about this because he was in the pool for 365 days every year for a certain amount of years. And he talked about it. It's all about discipline. Do you think he wanted to be in the pool 365 days on Christmas, on holidays? No. But he had a vision of what he wanted, and it took discipline to get there. And whether he was sick, whether he was injured, whatever it was, he was going to be in that pool. And I think that's the same thing, the same concept. Like, you're not going to be motivated every day. And I said this to an individual, and it was like a light bulb went off. They're like, oh, that's what's wrong. I've been waiting to be motivated. I'm like, you're not going to be motivated every day. It doesn't matter what's going on. There's going to be highs and lows. So you got to decide whether you're going to be disciplined or not. So I can talk about discipline all day long. I love that you mentioned that. Now, what is a book that you could recommend for our viewers, our listeners today? Because I love reading books. Actually, I do audibles, let's be honest here, in the car and other things. But what is a book that you would recommend for everybody to read that could help their entrepreneurial journey?
Can I give two?
100%. I love that you said that, actually.
Okay. I love Audible as well, and there's just not enough hours in the day.
I know, right?
To listen to it. But there is a book, just kind of piggybacking on this concept of discipline and time management. There's a book called Essentialism, written by Greg McEwen.
Okay.
He's actually a Gilbert resident.
I did not know that.
Yeah. He went to college with my brother, and that's when he wrote the book. Then my brother said, you got to read this book. I knew this guy in college, and he's a great guy. So he now actually goes around the speaking circuit. He speaks with large companies and helps them to identify, really the core crux of the book is what is essential in your life, right? And because if you really identify what things are essential in your life and in your business, the other things that are not important will fade into the background. And that's just kind of a high-level overview of the book. And it's been many years since I've read it, but just the core principles, just every day identifying, okay, what is essential for me to accomplish today?
I like that. I like that.
Second book that I just love is Unbroken, which is the biography of Louis Zamperini, who is just incredible. My daughter had to read it for school, and so I said, I'll read it with you just to help you with it. And I was just captivated. And his story is incredible, being lost at sea for 47 days or whatever it was, and then being tortured by the Japanese for 2 years, and just his grit and determination, right? Grit and determination was showcased by him. But then, really, the most powerful thing is how when he came home, the things that had happened to him had caused him to become bitter, but he then attended at the behest of his wife, a Billy Graham event, and was transformed. God transformed his life, changed his heart, and caused him to really change his whole outlook on life, and to the point where he traveled to Japan to forgive his captors, and then the rest of his life was just spent doing good. And so it just helps me think about, again, turning 50 this year, just wonder what's the legacy that I'm going to leave? What good am I doing? What legacy am I leaving behind?
I watched that movie. I'm going to go back and read the book.
I actually haven't seen the movie because I didn't want it to, sometimes you read a book and you think, I'm not sure that I want to watch the movie because it might taint what my image is in my head, but you've done the opposite.
I've done the opposite. It was incredible. And I look at people like that, and I guarantee the psychology behind them. They don't look at poor me. They don't look at, it's hard, or it's just is what it is. It is what it is. How do I survive? This is what it is. This is my life right now. Because so often people go, life's so hard. Or, no, it just is what it is. How do I get through this? What do I do? What's the next step? And it was incredible to watch that. And I love the word they chose, unbroken. Because literally, I actually imagine he was broken and picked back up every single day. But he was more of, hey, this is what it is. I'm going to survive. This is my life. And he moved forward. And it was like just making decisions every single day and being disciplined instead of trying to figure out the emotion behind it. He lived off of facts instead of emotions. And so I need to read the book. I love the movie.
And I'm going to watch the movie.
I know. Yeah. It was done very well. Now you're going to watch it and be like, it's not the same as the book. So you're going to have to let me know. Yeah. You're going to have to let me know.
No, the book is phenomenal. And the narrator on Audible you'll like as well. That's
okay.
Yeah.
I'm going to have to listen. Well, yeah, I'm going to listen to it on Audible. So that's exactly what's going to happen. The car is my favorite place, right?
I agree.
What would be the best advice, the last question, what would be the best advice that you could give the entrepreneurs that are going through the roller coaster, that are like, hey, is this going to work? The struggle, the real, trying to find their way through this journey.
I think just remembering, why you're doing it, and looking back on your life and realizing that even though what you're in the middle of is extremely hard, you probably don't want to go back to what you were doing before. I look back at my career, and the safe route would have been to stay in corporate America and just kind of work up the corporate ladder, clock in 9 to 5, because that's what I did, and it was, the stress level was lower than being a business owner. Mm-hmm. But there wasn't as much fulfillment. I wasn't involved in the direction of a company and in really helping out our clients in the ways that I think is important, instead of being dictated by somebody else. I think while running a business is stressful, there's so much satisfaction with with how much you can do. And I think just taking that perspective of, even though it's hard, I wouldn't want to be doing anything else.
And that's how you know you're in the right seat then. That's how you know if you love the stress, or you love where you're at, then you know where you're at. Awesome. Now, one other question, I've already said this one other question, but where can people find you if they want to look you up and connect with you?
Yeah, I would love to connect. And you can find me probably easiest on LinkedIn. Just type in my name and our company, Gallacher Capital. And Gallacher is spelled Gallacher, so with a hard sound there on the CH. So John Gillespie, Gallacher Capital, GallacherCapital.com, our website. Feel free to connect with us there. It has links to our other businesses that I touched on today. So, yeah.
Awesome. Thank you so much for coming on today, John. We appreciate it. I think the road less traveled is so incredibly important for entrepreneurs to hear, because it's not just a straight line. It's that roller coaster that you go through, that everybody goes through when they're an entrepreneur. So thank you so much for being on today.
My pleasure.
Awesome.
Thanks for tuning in today to The Road Less Traveled. If you're organizing an event, workshop, or simply planning something exciting and would like to have Tiffany Rosenbaum join you, or want to have her on your podcast, visit TiffanyMRosenbaum.com and click on Book Tiffany to get started.